MSTR is Google, and I want you to think about this with me in analyzing the one concept that got me to see past the idea of premium to NAV, premium to net asset value. One of the discussions that's going on in the MSTR bear case space, almost rhymed, is the idea that MSTR must trade at a premium to NAV of 1, i.e. MSTR must trade to the value of its underlying Bitcoin. And I want to explain to you why MSTR is Google, and this is a complete fallacy that I had fallen for as to why it must trade for its underlying asset value. So this is going to be a slightly more in-depth philosophical conceptual video, because I want to help try and explain why the MNAV doesn't really matter. I want to ask you, firstly, this is the point of this channel. The point of this channel is to break down very, very complicated perspectives and ideas of how, TradFi is going to look at Bitcoin and simplify it, right? So subscribe to the channel. If you're not on Twitter, or if you are on Twitter, follow me on Twitter, or subscribe and subscribe to the YouTube channel too. So why I want you to start thinking about Google is as follows. Answer this one question. Why do people invest and buy shares of Google? What do they want? What do people want when they buy shares of Google? And if you're sitting there and you're wondering, what the answer to that question, why do people buy it? Is it because of the innovation? Is it because of the web? Is it because of all of that? Is proxy. The one goal that people have when they invest in Google is they want Google to grow the value of their money. Growth stocks have done that over the last, decade, 2 decades. And growth has been the primary objective when you've got an unlimited money printer, because you need to take that unlimited money printing and you need to turn it into real value and growth. And people have believed that the way to do that is to put it into tech companies like Google, because they are providing real growth. They're providing real growth through innovation, through different product avenues, through new discoveries, and bringing those products to market. You are trusting Google when you buy those shares in Google to basically rely on their hundreds of thousands of employees to research what's going on, create brand new technologies, bring them to market, and that's going to give you growth, because what you're looking for is an increase in your portfolio value. You're looking for growth in your portfolio, so therefore you are trusting Google to do that. Well, why are you investing in Bitcoin? Why does anyone invest in Bitcoin? Because again, you are looking for growth. So my question is this: at what point do equity funds, so funds that cannot invest in commodities, they cannot invest in crypto, they cannot invest in things. This is the 60% of the market, right? Of the 60-40 bond portfolio that everyone likes to talk about. This is the 60% of it. At what point do they realize that Bitcoin is a growth vehicle? Bitcoin is a tool for growing your capital at a consistent 25 to 50% a year. When do they realize that? And then they realize that the service and the business model, just like Google, is taking your share, taking your dollars that you're investing in Google, and they're going in and telling you, you can trust us to build software, to build the best software, to do all the best research, to do all the best innovations, to grow the value of your money. At what point do people realize that Bitcoin does all of this without the hundreds of thousands of employees, without the competition of Facebook, without the competition of Apple? It is just one tool that does this. It doesn't need any innovation. It solves the one problem of growth that every single person, every single dollar has in a fiat world. When do equity funds realize this? And why am I saying equity funds specifically? Well, because when they do realize this, they will look for the equity version that gives them growth. By the way, Bitcoin does growth easy, faster, and more safely than Google, more safely than Facebook, more safely than any of these other tech companies, more safely than NVIDIA. I don't need to rely on NVIDIA to create, 1 nanometer processors in order to continue growing my wealth. I don't need Tesla to create cars that can drive themselves in order to pursue growth. I don't need Google to sit there and figure out how to tap everyone's, data and figure out how to monetize that in order to achieve growth. I have Bitcoin to do that. And the service that Microstrategy provides is that they own the one asset that is providing that growth, and they provide an efficient strategy to take equity investments and turn them into the one asset that is providing the most growth. It is the biggest, baddest equity out there that's doing that. And so when do these equity funds realize that Google, or rather MSTR, is Google. Google is MSTR because we're investing in it for the same reason, except the way MSTR is going about getting the result. So if we look past all the hoopla and the fancy bullshit around, I've got to hire 100,000 people, 100,000 tech nerds that probably got blue hair. They're out here trying to figure out how to fuck with everyone's data, etc., etc. Instead of doing that, I just invest in MSTR because MSTR is using Bitcoin to give me that growth result that I need. At what point do equity funds realize this? That is the question, because when they do, here's what's going to happen. Google is currently trading at a PE ratio, a price to earnings ratio of 22 times. People believe that Google, because of their reliability to create growth, is worth 22 times its earnings. Well, we can sort of look at the price to net asset value as that. And we can even go in even more in depth in certain times where Bitcoin is going up. So for example, right now, MSTR seems to be making, if you look at, take the last week or so, seems to be earning $500 million a day for their investors, right? So you think about all of that and you say, all right, well, why isn't MSTR worth 22 times its net asset value if Google is? Because the premium that Google is charging is for the growth that it is delivering, and MSTR delivers that growth safely, much more safer, much more reliably, and much more easily than Google does it, because I don't need hundreds of thousands of nerds. I don't need to pry into people's private lives. I don't need to do any of that. All I got to do is buy Bitcoin. MSTR can do this and scale it to $1 trillion without a single other employee. It is a growth company. MSTR is Google, because the only reason Google is because people need growth. People want to invest in the latest thing because they think it's going to have growth in the market, and they want to gain access to that growth, so therefore they buy Google shares. And they value Google at 22 times its earnings. So why can't MSTR be worth more than 22 times its net asset value? You have to look at MSTR not as a commodity fund, not as a commodity ETF. You have to look at it as a growth company, because it is a tech company that is utilizing the rocket fuel of Bitcoin to provide growth to its investors. It is as Michael Saylor himself has said, a treasury conversion. It is a treasury business. It is a Bitcoin treasury business. So that is what MSTR is. Got a bug coming over here. I guess what I'm saying is true. MSTR is Google, and when equity funds realize this, they're going to pile into it for that growth. Forget everything else. Forget the Bitcoin. Forget the underlying Bitcoin. They don't care. Do you think equity funds give a shit what technology Google puts out? No. All they want is growth. They want growth, 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 and more growth. And MSTR is outgrowing everyone. And if today MSTR was valued at 22 times its its underlying Bitcoin, it would already be a $750 billion company. So they're outgrowing everyone, out-earning everyone in certain acute time periods, and they're providing growth much more safely, much more stably, much more easily. They don't need a single other employee. They don't need to hire no blue-haired nerd. They don't need to do any of that. All they're doing is converting. They're utilizing the cash that you invest into MSTR, and they're utilizing that to turn it into Bitcoin, which is providing growth because of all the other effects that we've talked about with Bitcoin. That is the business of MSTR. It is a growth providing company. It is Google. MSTR is Google. And remember, before Google, there was something else, right? Before this whole tech boom happened, there was something else. So everyone is pursuing growth. And if you are pursuing growth, MSTR is going to be the fastest growing opportunity that you have. And therefore, it is only a matter of time until equity funds realize this and pivot capital from tech companies into MSTR, sending the share price skyrocketing. When the share price goes skyrocketing, MSTR can hit the ATM, operate a business, Bitcoin treasury business, convert that premium into more Bitcoin. Therefore, the underlying value becomes more volatile. It goes up even more as the Bitcoin value of Bitcoin goes up. They can borrow more money from the bond market, etc., etc., etc. You need to start thinking about MSTR as Google. And when you understand that, when you finally get it into your bones that there is a business service being provided here, just like any of these other companies, and that the final product they're selling is growth, which is what Google sells, Tesla sells, Facebook sells, everyone sells. The only reason they have the investments that they have is because of growth, and MSTR provides that better than any of them. You understand why you can get to a 22 times price to earnings ratio in essence on the price to NAV, because it is the growth that's valuable, and everyone is starved for growth in this world that we live in. And the more inflation goes up, the more monetary debasement happens, the more growth you need, and MSTR is providing that in bucketfuls, one hand over fist of growth. As much as you want it, MSTR has it. Start thinking about MSTR as Google. That's what it is. And start understanding that Michael Saylor is operating a growth company here, and he is taking this to the absolute maximum, and he is outcompeting all of these big tech companies on growth. And therefore, at some point, equity funds also, not just bond funds, equity funds also will come running for MSTR stock, because they will provide the growth that their clients are craving. But ultimately, there's always only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, shut the fuck up. And step number 3, you get fabulously wealthy.